One of the main things you have to know how to do when charting is to find the support and resistance areas as well as supply and demand zones. Many people think these two things are interchangeable and they are not. I'm going to share with you in this video how do you find supply and resistance as well as how do you identify supply and demand. All right, let's get into it. For the second session, a second day of the charting challenge for September charting challenge. And the plan is to cover candlesticks. We won't spend a lot of time there, but we will do candlesticks, support and resistance, as well as supply and demand. They are very similar things, but they're not exactly the same. So I'll make sure that we, try to clarify that. Candlesticks and charts. So a candlestick, this is the daily time frame. This is the Thinkorswim platform, as you see up here. This is the daily platform, time frame, which means every candle is holding 1 day worth of data. Every candle is holding 1 day's worth of data. You've got your stock price up here in the top. The time frame is also over here to the left. What is the current price? $466.88 at the time I was taking this picture. We know it was a little minute ago because now we're in the fives. It wasn't that long ago, but we're in the fives either way. And the open, high, low, and close. Here we go. OHLC is on, whether you're doing Thinkorswim or TradingView or wherever, you should still see this. And it basically goes along with whatever candle you're over. So as you move your mouse over the next candle, this OHLC is going to change. This tells you what's the open of that candle, the high of that candle, the low of that candle, and the close of that candle. The R basically is the range. Says that from top to bottom, it went 4.01 points or whatever dollars we do in the US, but that's what happened. That's the OHLC. The bottom of a green candle is the open. The bottom of the box, if you're going up, and the close of the box on a green candle, this would be the close. The low, this is don't matter which candle we're on, what color, that's the low. And then up here would be the high, right? The high and the low is the wicks. If the candle is red, the top is the open of the box and the bottom of the box is the close. Of course, we've got the high and the low, no matter what color, right? Every candle has an open, high, low, and close. Every candle has those. Time frames, the charts, even though you may have different charts for different people who provide charts, the same information should be present no matter what company or what broker or what platform you're using. Your time frame should be here. This OHLC should be provided. Your prices should be on one side. The dates should be at the bottom. All of those, right? Your indicators are going to be either here or like on TradingView is going to have a thing called indicators. It says indicators. You got studies, indicators are all under there. Drawings are under there. Patterns, all this stuff kind of goes with indicators. The style is going to tell you whether you want candles or what types of candles or you want a line. And this little gear shift here is going to control how the look and feel of your chart is. Okay? All of this same stuff should be on every platform, regardless of who's the provider. Might be in different places, but it should all be there. Okay? So now, support and resistance. Support and resistance is the place where the price goes and reverses. It's the peaks, the valleys, and the rest areas. Now, charts don't generally look anywhere near as easy as this right here. We're going to look at some real charts. And this is not really quite how the support and resistance, but I wanted you to get the graphic. That support is where the price goes down and goes back up, reverses, right? Resistance is where price goes up and reverses. We're up and reverses, up and reverses. This is resistance. And then sometimes, like in this place right here, the support and the resistance can flip-flop. Support can become resistance. Resistance can become support once the price goes through it. So where before this same line was resistance in all these places, once the price went through it and came back down, then this same area that was resistance before is now support. It's basically a parity place. It's a place where something flips over from being one thing to the other. And the same thing happens if this was to go up and then go back through here and then come back to touch it. Now it will become resistance again, right? This is that place, that line. And these zones, as you call them, can go on throughout the chart. These are places where people on where the buyer stepped in and where the seller stepped in, right? That's really what it really comes down to. Where are their buyers that are making it go higher, and where are their sellers that are making it go lower? That's the epitome of support and resistance. Okay. They aren't always as pretty as that, though. Believe me when I tell you. Support is like a floor where the price tends to stop falling and it bounces back up. Where the floor, where it stops falling and it bounces back up. That's the support. Like think about, and even though we got some guys here, think about your support of the chair or your support holes underneath your dress. And resistance is like a ceiling where the price tends to stop rising and it pulls back down, right? Notice we have support and resistance kind of going up. Higher highs, these are called higher highs, where the high is getting higher, is getting higher, is getting higher. But these are still resistance places. Those are still resistance places, even though the high is getting higher. So if we were doing like horizontal resistance, we'd have a resistance here, we'd have a resistance here, we'd have one here, we'd have one here. Okay, that's resistance. Support, where the price drops. This is support. If we were to draw a horizontal line, support, and support. Even though we got a trend going, we'll talk about trends on a subsequent day, but even though we have a trend going, there's still support and resistance lines even going through the trend, right? Resistance is above us, like the glass ceiling. Support is beneath us, like the chair we sit on. The chair is supporting us and supporting our weight as we sit in it. Those are supports. Supply and demand. These are the forces that actually move prices in the market. Supply refers to how much of a stock is available for sale. How much is available for sale, like how many sellers there are. Demand refers to how much people want to buy the stock. How much they want to buy the stock. That's a demand. The demand is how many buyers are there. When demand is higher than supply, the prices go up. I mean, let's think about real life. When people want more than there is available, the prices go up. If there's a shortage on gasoline and people need gas, that's when the price for gas goes up, right? When supply is higher, then the demand when supply is higher than demand, the prices go down. So if there's a bunch of something, right? There's a bunch of something, let's say, for example, number 2 pencils, the supply of number 2 pencils is pretty high. So the price of those is inexpensive. But gold bars, I mean, we can talk about something that's expensive, or Birkin bags. When there's demand is higher than the supply, then prices can go up. One of the things that makes, housing prices can move because of that. I mean, you all get it. Basically, supply is in that same area of resistance, and many times they're interchanged. Supply area can also be a resistance area, but a resistance area isn't always a supply area. That makes sense? Supply area is a resistance area. But a resistance area is not always a supply, not always the same. Support can be a demand area, but demand is not always support. When an area is supply and when it is not, because all the areas that show up as resistance aren't necessarily supply. Let's look on some charts. Let's see some more pieces about supply and demand. When supply and demand are equal, then we're at a place called equilibrium. This is where they cross is called equilibrium, where the price and the quantity kind of we meet in the right place. That's called equilibrium. But then what makes things move is the supply, the demand can move and the supply can move. And when those things move, then that creates that gap, which makes price move. The price is always seeking equilibrium. So when supply or demand shifts, the price will go to seek that equilibrium place again. Okay, price is always seeking equilibrium. Here's some pictures, supply and demand areas. A demand zone, price comes in. Now, this is also what we would clearly call this support, right? We would clearly call this support because it's a place where price goes and reverses. So it's clearly support. But notice there's also a support here that is not in the demand zone. That's not demand. Because there's a reason, our explanation for demand is where there is the imbalance of supply, imbalance of what we need is happening in the demand area. What shows it as demand, and that's part of your homework actually. After you go down into demand and gain some juice, we shoot out of there. He talked about it's a demand zone when you can see there's an aggressive move. It's an aggressive move out of there. That's a demand zone. Then up here, we got where price kind of went up here, hovered, and then decided it was ready to go, and shoot, off it went out of supply. It came back and touched it. See, now I see, I hope is this the same thing? SPY, 15-minute, 1 hour. I don't know if it was the same day or not. Because I would see all of this as supply also because of the way it shot out of here. These are just graphics. I think that graphic was just showing us the demand was shown on that side, supply was showed on this side. Supply and demand, not always support and resistance. So support and resistance are specific price levels that act as barriers, while supply and demand are the broader forces that determine the overall movement in price. As there is supply and demand, it comes down to how much of something is available. Okay, how much of it is available. Support and demand is where the people step in to spend money or to sell at this particular price. Okay, so I want you all to see the difference. Supply and demand is how much of something there is. If there's a high supply, then there are people gonna sell, right? If there's a high demand, and prices are gonna go up. The high supply, prices are is the price levels where people are willing to buy these things, or buyers step in. Like what's happening, even though we're kind of going to all-time high on SPY and triple Q, we aren't being able to sustain these highs. And you know why we're not sustaining them? There's not people who are willing to buy them at that price. There are people who let them get to the 560s or whatever, and then they go, oh, okay, good, this is a great price. I'm gonna go ahead and sell mine, and the price falls right on back down. It comes back down to a support area or a place where people are willing to buy at that price, and then they buy and the price goes back up. It gets to the place where we are about now, and people say, I'm not willing to buy up here. I'm not willing to buy. I'll sell up here though, because these are a great place to sell, and they sell and the price comes back down. Like today. Today's sell-off was painful for some, and a lot of money for others. All depending on which side you're on. Okay. Support and resistance, specific price levels that act as barriers. Supply and demand is how much of something is available. Let's look at a chart. Looking at this chart. Start over here at the right, and many of you started with us at with IWT or TNT, so we start at the right. If you're looking for support, you want to go down and to the left. You go down to the left. Let me get my pencil again. Start at the right, basically the last candle here, and you go down to the right to find places where there's valleys. You see, I say find the valleys. There's a turning point right here. It's the turning point right here. This turning point here really matches this one. If you go all the way across, this is the same turning place. See how these zones can be repeated? Okay. Many times people don't look in here, but I do. This is also a place of support now, because it's a place where price went up and reversed, but now since it's below current price, this is now support also. From where current price is, This area is a support. And you also start at the left. See, I would say start here, start here. You look up to the left for your peaks. Where are the places where price goes up and then reverses? Here's one. Price goes up and then it reverses. That red candle means we're going down. Green candles mean we're going up. Here's another one, a little bit higher. Right? We went up here and then came back down. Since this line here looks like a dip in the valley, but because it's above current price, see if we were to drag this all the way across, of course you would have a straight horizontal line. This is now resistance though, because this is an area that price came down and reversed. Remember, support can be resistance and resistance can be support depending on the location. While we're looking at this, do we see anything that we could potentially call a supply or demand zone? Up here in this zone where price kind of hung around a little bit, and then when it came out with force. This gap down, you would have made this big old candle. Up here, I would call this a supply zone, supply, not support, FPPLY, because price was hung out in here a minute and then came on. Notice this is also a resistance area. So it can be a supply can be resistance. Basically, a supply will be resistance, but a resistance isn't necessarily supply. I don't know if I would call this a demand zone. It didn't really come out of here with force as was supposed to. So I probably wouldn't call it that. But I think it's a good view that support, resistance, supply, and demand, they're very similar, but they're not the same thing. So when you're doing support, resistance, not support, like supply and demand, well, actually anything you're charting, you should start at the higher time frame, depending on what you want to chart for. You really have to figure out, okay, am I planning to trade this for the day? Am I planning to trade it as a swing? Am I planning to trade it like a leap? Like, what are you planning to do? You have to think about that, because that's going to give you like a starting place on where you should chart. But if you're charting and let's say you're going to trade something for a couple of days, maybe a short swing trade, I'm trading it maybe this week, then you're going to want to look at the month for, is there a supply and demand zone? Are there those zones? And support and resistance, because those are going to be very strong zones. I would look for both, because again, your support and resistance is going to sometimes be supply and demand. And then come down to the smaller time frames, the week, the day. When you get down into the 15 minutes, I don't feel like at that point you're looking anymore for supply and demand, because you would have identified those supply and demand zones from the larger time frames, from the higher time frames. When you get down into those smaller time frames, you're really looking for support, resistance, and reversal places. I'm going to show you here, this is an indicator so you don't necessarily, depending on if you want to use the indicator or not, you don't even have to look all that hard, because this indicator, which is called Smart Money Concepts, it's on TradingView, Smart Money Concepts. This indicator will actually give you the supply and demand zones. He'll actually do it for you, right? Or this indicator will actually do it for you. It tells you that this is a supply zone. You can also see that there is resistance up here. Yeah. Okay. And then this blue down here is the demand. Oh, that M looks a mess. This is the demand zone down here, but it's also support. It's also support here. I definitely would look on, again, depending on your time frame, I would look on the monthly, weekly, daily for your supply and demand. When you get down into the smaller, unless you're scalping, I wouldn't look for supply and demand. If you've already identified it on the higher time frames, you don't need to look for it again on the lower ones, because it should still be evident in the higher time frames. Well, remember what was said by the guy who did the video, Lux Algo is actually who did the video, was that when you are in this area, this is the demand area. Basically, price leaves and goes. And then when the price comes back to that demand area, you can then trade this as an entry because it has basically come back to the demand area. So it basically has come to hit the same demand area, and now it shoots back off of here. So the green candle is responding to the demand area. So the buyer zone is basically, like you said, the support area. You got your supports, you're in, you hang out, and you go out. I think, well, what he said too is what lets you know fully confidently that it's a demand zone is when it comes out of here, does it break the structure? So the structure here, after it passes the high, this CHOCH means change of character inside of this app. This means change of character. Basically, it says that it changed from going down to going up. So it changed its character. Too many letters in the word for me to type with using my mouse, but here we go. So this at this point here, let you know that that structure has been broken and it's continuing on. This is what makes this is what confirms that this was a demand area. So I think when the price, you're asking, do you call this a buy zone or do you call it a demand area? Well, it's a buy zone until it is confirmed demand. Or it's support until demand is confirmed, and demand gets confirmed after it passes this break of structure. Okay, or that change of character. This supply did a similar thing. We were going up, it came back down. So now this is basically seen as a sell zone or resistance area, and then it comes down after it passes the change of character, which is basically breaking the most recent low here, the most drastic, I guess, recent low. Then now we can classify this as a supply zone because price moved out of it enough, it kept going enough to be given the title of supply zone. It was a resistance zone or a sell zone, either way. So the question is it a supply zone as well? And then after it passes and pushes on past that break of structure or change of character, then the answer to that question is yes. So the demand and supply has to be confirmed by continued price action in that direction. You want to know when, because we know that a support and resistance area don't always hold. Support areas or resistance areas don't always hold. And one of the ways you can know whether it is going to hold or not is if it's confirmed a supply area, then when the price comes back here, it should respond like it's a supply area. Basically, it should hit back and go on through. It should respond like that. This kind of gives you more confirmation that it's going to respect this area. Just like here, when it was demand down here, we did all this stuff. And when it came back to this same demand area, because it was demand, it came right here and bounced off of it hard and went on back up. Let you know that it's not just an area you kind of can give you, it's more confirmation that if the price comes back to this area, I can trust that it's going to reverse here. All the stuff you see, I turned off all the other indicators so I could take this picture. But you see that this green goes with the break of structure. This goes with break of structure. The red is here. The blue is here. I'm not sure how many of you do fair value gaps, but this indicator also has a button you can turn on. You can also turn on fair value gaps. Let me go up here to it. I'll bring us up to it so we can actually see what the indicator is actually running on these two. These are the two charts we were going to look at today. That we are going to look at today, but I want to show what does this is Smart Money Concepts by Lux Algo. And it's a free one as long, it's not a paid one. Some of the indicators on TradingView are paid ones. This is not a paid one, it's free. So if you have the free one or you got a paid subscription, you don't have to pay any more for this for this indicator. So I'm going under settings here. This is kind of small, and I'm sorry, I don't know how to make this any bigger. I don't know how to make this look bigger, but you got the showing internal structure, confluence filter. I'm not sure what that is. I leave it off. Show swing structure, swing points, like where does price reverse? I probably should turn that on. And then show strong, weak, high or low. Like down here, if a zone is weak, it'll tell you that. It'll say, it's this, but it's weak. Like up here, you can't see these little words, but it says weak. Weak high is what this says. Again, y'all can't see that because I can barely see it. Swing order blocks, I leave that off. Equal high and low fair value gaps. So for those who do ICT or learned fair value gaps, I know what they are, but I don't utilize them in my trading, so I didn't leave it on, but you can turn them on and the fair value gaps will show up here. Auto threshold, you got the highs and lows of the day, the week, and the month. This is something else that would be good to know. Another area of support and resistance is what was the high of the day, the week, and the month. I have those off for now, but that's something you can turn on. And you can have on premium and discount zones. I don't have that on either. Premium, equilibrium zone, which equilibrium would be good to have maybe, and the discount zone. Basically let you know where our prices at a premium, where our prices at equilibrium, and where our prices at a discount. Okay, we can turn that on to see if it does anything. And then the style just basically tells you want the boxes, the lines, the labels, all that good stuff. And you say, okay, and you get all the things. See how this gray showed up? That's that equilibrium I was telling y'all about. That was the gray was equilibrium. And you can go in there and toy around with the different things that show up on there. There's, a few videos on the indicator as well, on how to use the smart money concepts. There are a lot of big traders who use smart money concepts because it's got so much information all in one place. Those who are structured traders who want supply and demand areas, who also want to include fair value gaps. All that stuff is in one place. That's a little more information than I like to have, but I do like that it's all in one indicator and you can turn it off. I do like that. Hey there, trader. I think I've discovered why most traders are not profitable or are not consistently profitable. And that is the lack of charting technical analysis. Yes, it is a lost art, basically. We're looking at the chart. We see that the candles are going up and down, but not really knowing what is really happening. Everything you need to know, almost everything, like 99% of what you need to know is in that chart. So I've created a training resource that is called Chart Your Way to 100K. It starts with the basics of what is a candlestick, all the patterns, all the things like that. Starts with the basics, and then it goes up from there. It includes candlestick patterns, chart patterns. It includes indicators. It includes what you should be looking at when you're charting, trend analysis, gap analysis, all these different things. Everything you need to go from no charting ability up to being a master charter, you can find in this Chart Your Way to 100K resource training. All right, you can go ahead and grab it at my website, educatortotrader.com. I promise you, this is going to make the huge difference in your trading consistency. All right, go ahead and grab it. I want us to look at our support, some resistance, and let's see what we see in this area. I had selected SPX. I wanted you to be able to see our support, resistance. Oh, I turned on the pivots. I turned on pivots, but we didn't talk about it. The pivot points is another indicator. This pivot point here is basically the place. It's a mathematical calculation that decides that this is the place of pivot, where we pivot up and down basis. Some people use it to say if it's above the pivot, then we're going up, and if it's below the pivot, you're going down. And the pivot points work on any time frame that you're on. Right. So if you're trading on the 15-minute, or you're trading on the day, or you're trading on the hour, the pivot points adjust to match the time frame that you're on. Okay. Now the Lux Algo, or the Smart Money Concepts has our supply area up here, and we've got a demand area down here. I turned on something. This right here is not demand. This, oh, it may be demand. It might have been demand based on this. Okay. But we would want to look at, let's say if we didn't have any of these indicators, I'm going to turn all this stuff off. We'll turn our indicators and stuff off. So that way we can see where would we find our own support and resistance. Where would we find support and resistance? Now, anytime you're starting to do your charting, you should start based on, like I said to Mr. Mack, you should want to look at what do you plan on trading? Do you plan on trading your credit spreads for the week? Do you plan on trading just something for today? Right? So you said yes for today, then let's make sure that you're starting with a high enough time frame, right? I will usually start with the week, depending on what I'm doing. Like over the weekend, I did take the time because the month ended. I did look at some monthly charts, all right? Generally, I trade credit spreads that I'm in from week to week. So I don't necessarily come all the way up to the monthly time frame. But if I'm looking for some buy trades that I know I'd like to stay in for several weeks, or I want to look at the monthly, what did the monthly chart do, or how did the month close, and I'll go to the monthly chart. All right, so we start at the monthly chart, knowing that monthly zones are stronger than weekly and stronger, those are stronger than daily. Okay, I'm looking at SPX. We can look at a different stock if we want. I got SPX and triple Q, but I know y'all like, some people like to trade Apple and other things, but SPY is another popular one people like to trade because SPY today, as they call it, was falling off the bone. This is the start of the month. It's a monthly chart. Monthly chart. Okay, so let's start from, I'm going to bring this over here. Let's start where we are. At this point, we don't have any resistance because we are at all-time highs. We do have this little one here because this is where price pulled back off of that. So I guess that would be our most closest resistance would be the candle from last month. Okay, I'm going to put this here and then we can put a little note on it. That's monthly resistance, right? If we were going down a little further, we could go down here and we could say, okay, this would be starting here, going down to where price stopped and reversed would be right down here. That would be the first one we come to. Now, I'm a fan of doing 2 to 3 on a time frame. For me, you don't want to do, I feel like you don't want to do too many because it just gets your chart all crowded, right? Gets your chart all crowded. But if you're putting words next to them, that's going to make it a little easier to manage, because at least, or change your color. Sometimes people have, like Jamie has a color convention that goes with his. He does colors for different things. Monthly support. He does colors for different things, and I want to say this. Yep, and so that can help you too. Monthly support. Save. Okay. Starting where we are, you go up to the place where it, took a turn, went up and took a turn, which in this case, it's right next to it last month. And then you go down to the nearest place that it went down and went back up. If you have trouble seeing it, like if you say, I don't know if I can notice that, go up here to where it says this little candlestick is up here. I'm up here. Y'all see my mouse dancing around up here. If you drop down here, you can pick the line. You pick the line chart, you pick line, it'll turn it into a line. So wherever you see peaks and valleys, then those can be your support and resistance places. In this case, this was our monthly resistance. This here is another one that's going to be a monthly support because it is below current price. It is below current price. So I'm going to put this here. That's going to be another. I can go to my template and put on monthly support. Okay, let's go back to our candles. That's all we'll do for monthly right now. I do see some others. I'm sure you all do too. There's one here, one here, one here. There's other things here. I just wanted to put 1 or 2 on here so that way we can see what happens at this higher time frame, and then we go down to the weekly. I like having the little things over here to the left that you can have it writing, because otherwise for me, if I come back to my chart and there's not anything written there, I'll be like, what is this line? And then I'll erase all of them and start over because I don't know what the line was there for. All right, now we're on the week. Start every candle now is 1 week's worth of data. Every candle is 1 week. Every candle is 1 week. So we're starting where we are. Again, our resistance is right above us. This is also our weekly resistance, even though it says monthly, it's also weekly because we're on the weekly chart and this is the same place. It's in the same zone. If we're on the weekly though, and we're going down to the weekly support is going to be below this candle. Now, just know, I want to say that the zone is not just the bottom of the box. I put it at the bottom of the box because weekly support. I put it at the bottom of the box because that for me is easy enough to see. But notice how we're at the bottom there, but there's a little bit of a wick. And I know all of the people who did IWT were told to put the two lines on for the proximal and the distal. I still remember that. I haven't forgotten the training, right? But I know if you put 2 lines at every place, you're going to have a whole bunch of lines. And I can't do a whole bunch of lines on my chart. I cannot. So I know, and you should too, that wherever you put a line, I know that's a zone, that it's not just a hard line. There's room there. There's room there. What was told to me was this support is like a trampoline. When you're jumping on a trampoline, you don't automatically just stop hard and fast on the trampoline. This is not concrete, right? You're jumping on the trampoline. So when the price comes down, it comes down and bounces into the zone some and then goes on back up like you would on a trampoline. That's how you get this little extra shadow, extra bounce, extra whatever you want to call it, right? The price went on down a little bit further, but it didn't stay down there. It didn't close down there. Okay. But just know wherever you put a line is a zone. Okay. That was the weekly support, right? If we're looking for this in this area here, which is where we had the monthly support, is also some weekly resistance and or support in the same zone. Okay, this is a place where we were talking about how resistance becomes support. Over here it was resistance. Over here it was resistance, right? Price went up and reversed. And then next time it came on, it went on through. And then it went through and came back to retest it only so it can go up again. This now became support. It was resistance over here, but it's support over here. They definitely can flip. Okay. Weekly support. I think we got another one we can identify down in this area. Template. Nope, not resistance. Weekly support. Okay, so now we've done monthly, we've done weekly. Now we can go and look at daily. And you can go down in time frames as far as you want to go. As far as you want to go. Okay, so this is the daily time frame. Starting where we are, we can see all this bouncing up here. So now the question is this potentially going to be a supply area? Hasn't been confirmed yet because the price hasn't left it enough to confirm it. But is this a supply area? It stayed up here a few days. Could this potentially be supply? Depending if price goes down, it could be. If price keeps going down, right? We started today at 56.24 and we ended today at 55.28. That's 100 points. Almost 100-point drop today. That's a lot. Okay, looking for supports. We see gaps here. We're going to have to talk about gaps on Thursday, but there is a gap between these two candles. We're not going to spend time there, but gaps do provide support and or resistance depending on where they're located. So that is going to provide some support. I won't mark it right now, but just know that gaps provide support. We also have here what would be called by trading with Terry or IWT would be right here would be called a chair. There's a place where price went and it kind of sat for a minute. That's going to also be a support area. These here are not going to classify, not going to qualify. This one almost could qualify, but we've got some stuff over in here. These lines also have us some stuff over here that we could possibly see is going to be support over in here. The line helps you to see what you may not be able to see with the candle, but you see how quickly your chart can get real crowded. See how quickly the chart can get real crowded because there's a little dip right here that is above current price now that is going to provide resistance if we were to try to go back up. Let's go back to the candles. Current price is right here, but at this dip here, this was support. Here, this line right here was support right here. But now that it's above current price, guess what it's going to become? If the price goes back up, it could potentially be resistance. Now you can continue, like I said, you can continue going down in time frame. You can continue putting on more lines, more and more lines. You can continue almost ad nauseum, right? What you want to know is where are the places where your trade could potentially go and turn around. Now, if you're trading as a buyer, you're definitely going to want to know where is price going to go and drop back. Because if you're buying calls or buying puts and it goes, let's say even here, and then price goes and reverses on you right here, prices, if you bought puts, right, because you expect price to keep going down and then the price comes back up, you do want to know that this area now is a point of resistance. So that lets you know that if price turns back tomorrow, you want to see how does it act at 55.68. How does the price behave around this area? Does it reverse and reject at this area, which is what you would want it to do? Or does it go on through? Which if it does go on through, that lets you know it's time for you to let your puts go. Might be a time to let the puts go, even though you got another level of resistance about 3 points. Nope, that ain't 3 points. That's more like 90 points above it. You don't want to wait for 90 points. You don't want to wait for a 90-point move on up before it rejects again and comes back down. Your money, your theta will be eating away your trade. You don't want that. Right? This is where your knowledge of support and resistance can really come in handy if you're a buyer. Now, if you're a seller, this matters too. Because if you entered, let's say you're selling and you did a trade that was maybe 55.70, call credit spread, which is the thought of you believe it's going to keep going down, and it comes back and doesn't respect this 55.68, then that lets you know that my 55.70 trade might be in trouble. But if you didn't have anything marked here, you may feel like you had a free for all, or you were good all the way up till here. You might be worried that it's going to keep going all the way up till here, when really there's some resistance in the path and actually it's touched back here a couple of times. This resistance is not new. It's been touched a few times. That lets you know how does it respond at this area. May give you confirmation to wait on it. Maybe it's hovering in this area and you're like, well, I don't know if I'm gonna get out or not. And you see it's around here. You're like, you wait and see whether it reverses and make your trade be fine. Or if it goes on through there and your trade goes poof, you want to know this is how you use your support and resistance. So now what I've been learning and understanding is your stop loss goes at the top of your entry candle. If you decide I'm entering based on this candle, that's where your stop loss would go. If you're doing puts, okay? Stop loss at the top or the bottom of your entry candle. You can put stop loss. Okay. And I'm going to show you a somewhat easy way. If on single options, it's I won't say easier. It's easier to determine on your single options, it's easier to determine. Okay. I have bought Nike. We can use Nike. We can use any of these, to be honest. IWM. The Nike one is fine, I guess. Okay, so I bought it for $4.35. This is a spread, actually, was what it is right here. But let's say we're only looking at the buy leg if you were buying. So you have a trade price, you paid $4.35, and I say, okay, I want to find out, I want to determine based on the price, what would I want to set for my stop loss. So I'm going to right click on here. Basically, you would create your closing order. And you're saying there's something called expected Nike price. So if you're saying, okay, I want my stop loss to be based on the price. If the price gets down, this was a put or call. This was a call. So if the price goes down to, see right here, see expected price down here. So it said, okay, if my stop loss for me is at $80, right? As I adjusted this price here, notice how that expected Nike price changes, right? So if I said, okay, my stop loss is at 80, then I'm gonna keep going down till I get to maybe $80. And it says, okay, the price of the option is $3.15. At $80, it's gonna be about $3.15. I can then set this as a stop limit. You can set it as a stop limit order that basically says, if the price gets to $3.15, then stop me out. Now for the spread, so it doesn't work as well. Now this is with option buying when you're selling. So if you're selling, I'll show you the other way for selling too. But this is a bought call. So when you're doing it as a sell order on the spread, it doesn't have that same expected condition because it's working with two strikes. It doesn't work the same way. What we have to do if you're selling an option, if you're selling, let me go back to monitor. So if I decided, okay, I took in $11 here, but I want my stop loss to be at $30, right? I generally with the selling spreads, that price for us is based on how much am I willing to pay to buy out. So I may set my stop loss at 3x, 3 times what I took in. In this case, I took in $11. So I feel like if it gets to $33, I'm gone. This is $11. This is a trade price. The difference between these two is 11. So if it gets to where I can do a right click here for both of these, create closing order, and it says, okay, if this gets to $30, you can take this, you can type in here, or you can use your plus minus buttons. And I also want to say the stop limit. If it gets to $30, I want you to stop me out. You have to predetermine what is that amount where, I've looked at 2x or 3x or whatever, and then you put that in here to say, I'm willing to buy it back, but I don't want to buy it back for 3 times as much as I got in. And then when you're ready for that, you can confirm and send. When you're a seller, you want the premium to draw down, and that's how you would set your exit. Your profitable exit would be for, $2 or $3 or 50% or whatever that amount is. So that works on both sides. It'll buy back. If you're selling contracts, buy back on either side, the profitable side, or if it's going against you side. You definitely can set your stop losses for selling, you buy back. And when you're buying, you basically sell to close. Yes. That was SPX, and this is triple Q over here. It looks similar. But shoot, today, as they said, one of the guys in the group brought me and talks about how it was falling off the bone. I'm going to tell you where I would have seen where we could. Now, this is the daily chart, right? So if we were on, let's say, a 15 or 30-minute chart, we can start with the 15. If you're buying, you're probably looking for shorter time frames, right? Now, I trade the Strat. So in trading the Strat is a very visual trade method. I want to say, there's my candles. Okay. So because I trade the Strat, the candles will almost tell you what they're doing, right? So the open today was what was called a 2 down because it went 2 down from the previous candle. The next candle also was another 2 down. And then the next one was a 2 down. So basically you got continuation going. Once the price got to what will be equilibrium, which I didn't necessarily look at the equilibrium because I didn't have this turned on, but I did see that it paused, that this pause here, right in here, yep, that green one. Once it paused here, it gave you an idea that it was going to, it was trying to come back up. But once this candle passed the bottom of that one, but this was that pass of this bottom of this candle said we were still going down. And no candle came back, you know, and got above there. Even this red one here, and this was a 2 down, and it tried to come back up, but it could not surpass the top of the previous candle. It didn't ever come back beyond the top of this one. So that lets you know it was still trying to go down some more. And all of these are 2 down candles. This one was a up candle because it kind of went up here a little bit, but then it didn't close up here. 2 down, 2 down, 2 down basically gives you indication that we're still going down. And when you the way that the strat entries work is once the bottom of a candle is surpassed, then that's entry for the next that's entry for the next candle. And then if you aren't too sure about that, you of course can change time frames. That's the 15-minute. You could change to the 30-minute time frame. And the 30-minute time frame kind of gives you some of the same picture. But because there's nothing here that showed a reverse, there's nothing that showed it was. And one of the things I heard a guy say, which I've said to my community a few times, is it's not where it goes, it's where it closes. It's not where it goes, it's where it closes. So even though it was, these wicks look like they're trying to go up, it didn't close up there. So it's hard to wait through a candle though. For these are 30-minute candles, to wait through a whole 30 minutes to see what happens. But these candles couldn't get back up there. The reversal would have been a full turnaround beyond the top of this one. And that didn't happen. This next candle went lower than this. So you got lower lows, or lower highs, lower highs, lower highs. Unless you're going long term with something, we can set some of these sell trades. We may be able to set on the weekend, but to buy options, to me, the weekend, you have to almost enter them manually, even if there's a trigger, because unless you're setting a trigger, like if your trigger, like I had United Airlines, I had a trigger for 44.16. That's when I would enter calls if it got above 44.16. It never did. So that trigger never, it never tripped because it never did that. I actually have also, I looked at SPY and Triple Q. All of those ended on hammers last month. But my trigger was that it had to get above, like I think even the Tesla trade, like above 219. And if it didn't get and sustain above 219, then now Tesla did that today. It got above 219, but it needed to sustain. And I didn't enter that trade, but that's what I had written is if it got above a sustain of 219, but what it did, it hit 219 and then dropped back down to like 214. And I was like, well, you just wait and see. I think if you're entering as a buyer, I feel like entering as a buyer, you definitely got to do it when the market's open. Yeah, unless you got it going in your sim. Of course, if you got stuff going in your paper and your sim, you can try all kind of stuff in there.